MMTs, this is what we call the RWM. And the RWM is a ProShares Trust. It's a short Russell 2000. That's what this is. Here's a standard chart, but let's use our platform because our charting is much better than this. But you can see right here, RWM ProShares Trust Short Russell 2000. The important thing about this particular video is that yesterday we did the iShares 2000. It's on there. What we want to do now is take the RWM to the iShares bull, you know, that's going up. And that you can short this bear. You can go long the bear. Once again, when we take a look at the cycles of how we put bottoms, when we were selling off, you could short this bear in the Russell 2000. When this was going straight down, the Russell 2000 was breaking out. This was early in the year. Then what ended up happening is that when the Russell 2000 started to sell off very hard, which it did, we started breaking out higher. We pulled back. But look at this. Look at this big peak, this big breakout down here on a daily chart. And by understanding where the Russell 2000 bear is and where the Russell 2000 bull is, using the iShares and using the ProShares here, because it is a ProShare short Russell 2000. Okay, so you have the iShares that you could trade long the Russell 2000, and you could be shorting this bear outright on a daily level, and these are overnight trades, understanding that we only apply these at extreme bottoms. When we put in extreme bottoms, we're not at a bottom anymore. We're going to come down here on this, and we'll see where this lands. So when we're looking at where the bear sets up its next move higher, we know that we would go long this. But then on the other hand, we'd go back to the iShares 2000 that's on the videos there on the homepage, and we'd be shorting that one when that time comes. The best time to put these trades on MMTs are at extreme market bottoms when they don't want to break. That's why the bear went straight down and the bull side went up. When we were selling off, we had big breakouts, but it's understanding the equilibrium of where markets are using several, and I mean several different types of long, short, bull, bear, different iShares, ProShares, ETFs. It doesn't matter. Then the Russell 2000 index, the stocks that are in there that make it move, the sector in itself outside of these, is understanding where the combination of these things are going to be. So what I will say here on the Russell 2000 daily, because that's what it is, you can see here, same chart over here. Here's a standard one. It's coming down and making double bottoms. It's in a daily sell signal. I'll just cover that up right there. And basically in our platform, which calculates the market for us, does all the work for us, is that we're going to come down. We'll see where we end up landing next week. The thing of it is, though, is where the trade management will come into play. And we got down to the lows here. I'm just going to show it right here. This is where the low was, right here. The low on Friday was 29.04. It doesn't move a lot on an intraday level, but on a compounded daily level, at extreme market bottoms and or extreme market tops, that's when these trades work. 1 day, 3 day, 5 day, 7 day, 10 day trade management scenarios with iShares, ETFs, ProShares, bull ETFs, bear ETFs, Russell 2000 index. It doesn't matter. It's the combination that's put together to know exactly where the components of the market are. And here it is right here. So when I'm selling off in the bear, I am long that bull. I'm going to short the bear. I can short this outright. Put in the tops right up here. Have the big reversal, comes back up, tests half of the bar, slid that bid, went straight down 5 days in a row. This is how the trade management works.